What if I told you the next stock market crash could erase billions of dollars without a single dollar actually disappearing? Every time markets crash, the headlines sound terrifying. Billions wiped out in a single day. Markets collapse. Investors panic. And people imagine money vanishing into thin air. But the truth is far stranger. Most of that money never truly existed in the first place. Because the stock market is not built on guaranteed reality. It's built on belief. And belief changes fast. Right now, I believe another market crash will happen eventually. I don't know when, but history shows us that confidence never lasts forever. Wars, political tensions, economic fear. Eventually something cracks the optimism holding markets together. And when that happens, panic spreads. But here's the question nobody asks. Where does the money actually go? The answer is nowhere. Let me explain. Imagine the stock market isn't selling shares. Imagine it's selling tins of baked beans. Across the country, there are 1 million tins of baked beans sitting on supermarket shelves. Every tin costs $1, which means the total baked bean market is worth $1 million. Now imagine one supermarket cuts the price to 80p, and the others follow. Suddenly, every tin is worth 80p instead of 1. The market value drops from 1 million to 800,000. According to the headlines, 200,000 has disappeared. But did it really? No, because the beans are still there. Nothing physical changed. The only thing that changed was expectation. Yesterday, supermarkets believed customers would pay 1. Today, they believe customers will only pay 80p. That's it. And stock markets work exactly the same way. A share price is simply the latest guess about what someone might pay for that company in the future. It's not guaranteed cash sitting in a vault somewhere. It's a constantly changing opinion. When confidence is high, prices rise. When fear takes over, prices fall. The market is basically human emotion translated into numbers. That's why prices can move so violently without anything physical changing overnight. A company doesn't suddenly lose all its buildings, employees, or products during a crash. What changes is investor psychology. People stop believing the future will be better. And once confidence disappears, prices drop fast. This is where most people misunderstand crashes. If your shares fall from 1 to 80p, you haven't actually lost money unless you sell at that lower price. You still own the same shares. The loss only becomes real when panic forces people to sell, and that panic is what creates true market crashes. Fear spreads faster than logic. One person sells, then another, then millions follow. Prices fall even more, which creates even more fear, and the cycle feeds itself. That's what happened in 1929. It happened again in 1987. And again in 2008, not because physical money disappeared overnight, but because confidence disappeared overnight. The stock market is not a machine built on certainty. It's built on emotion, and emotion changes quickly. One war, one financial crisis, one major headline, that's all it takes to shake the system. But here's the important part most people never understand. A market crash does not automatically mean the economy is destroyed. Markets often overreact. Sometimes prices rise too high because of greed and excitement. Other times they fall too low because of fear. The market swings between optimism and panic constantly. That's why experienced investors don't always panic during crashes, because they understand that markets move in cycles. Fear creates crashes. Crashes create opportunities. Then optimism returns. Prices rise again. And eventually, the cycle repeats over and over. The entire system runs on confidence, and confidence is fragile. So the next time you hear someone say billions were wiped out from the stock market, remember this. The money didn't vanish into thin air. The market simply changed its mind about what things were worth. Because stock prices are not permanent truths. They are emotional guesses about the future. And sometimes, those guesses are wrong. That's what a crash really is. Not the destruction of money, but the destruction of belief.